Let's welcome on board then Sandip Sabharwal as well and chat about markets with him. Sandeep, hi, morning. Good to have you on the show as always. And what a magical Budh Purnima it turned out to be. Seems like the June 4th magic was struck yesterday itself. But where from here? Do you think it's as good as it gets, or do you think the short covering bout and maybe some long edition has only started now and the rally could very well have more legs to go?
Asha, as always, I've maintained that what the Indian markets do, because most markets globally are heavily overbought in a way, will depend on global cues. So we saw that yesterday, like for a couple of days, US markets have been selling off, commodities have been under some sort of pressure, the dollar has been stronger. So these are not good indications for the absolute short term. So I think for someone who thinks that markets can go up in a straight line, it's I don't think that's going to happen because valuations are no longer cheap. Like they were not cheap for some time, but they are getting more and more expensive. And yesterday's move, to a great extent, in my view, given the large FI buy figure which we saw, was because of a lot of FIs who, on the P note side, would have been short, expecting the market to go down, would have had their SLs got triggered and created the huge round of buying. That's why the move was dominated by large caps, F&O stocks, and the mid cap indices underperformed because the buying was concentrated there. So it makes sense to be a bit cautious near term.
Okay. So when you say cautious near term, would you be tempted to book profits from within these cream large caps where you do sense some buying coming in or short covering rather?
So selling depends on whether you have some cash on the sidelines or not, because the longer term prospects don't change. So if you have 10-15% cash on the sidelines, then you don't necessarily need to sell. But if you are sitting on zero cash, then I think such levels of the market and the kind of moves we've seen, it makes sense for people to generate some sort of cash because uh, given the hugely overbought levels, not only on the large cap side, but also in some of the fancied segments of the market on the mid and small caps. Whenever the correction comes, then the sell-offs also could be very drastic in a short period of time, and that will give the opportunity to buy the stocks you want to buy at that time.
Interesting. So what's that list of yours, Sandeep? Because I bet you're sitting on enough cash as well and enough profits too.
So, so I think when I'm saying that you should have some cash at that time, recommending stocks to buy is tough. But I think where people should be looking at is trying to buy into, I think, consumer names which have not participated so much and which will actually outperform if there's a correction also. So companies which benefit out of rural economy recovery, something like a Dabur or HUL, which have underperformed. So these are not highly volatile stocks or which will move up drastically. But then at 23,000 levels of the Nifty, you are looking at moderate returns in any case. So I think stocks which can deliver you a 15% kind of return on the large cap side would be would make sense. Then on the election day program, we discussed LNT because that is a clear beneficiary of revival in capex cycle again once the new government gets formed. So I think that should be in the list. Some large banks should be in the list from the large cap side.
So which ones are those? Kotak and HDFC Bank because they haven't moved, or would you say stick by with the leaders and ICICI Bank clearly being one amongst the lot?
So ICICI Axis should be in the core list, and then Kotak is a decent contrarian bet because I think what we've seen from the RBI is that normally all these restrictions which are being put are going in a period of around 6 months. We saw that in Bajaj Finance, we saw that in Bank of Baroda. So I think if that's going to happen, then in 4-5 months we might see those restrictions go away and the sentiment negativity which was created at that time could go away. And the stock obviously trades at valuations which are much lower than historical valuation, which were very high. So let's not correlate to that. but in comparison or even cheaper than ICICI Bank, I would think at this point of time, or at par with that. So it's a decent bet.
But Sandeep, to the point that you were earlier making, what about mid and small caps? Do you think it's best that you take profits off the table, especially in the names which have seen a parabolic move, all your defense, etc.?
So again, it depends on time horizon and what stocks you're holding. So if your horizon is long enough and you have some cash on the sideline, it's not necessary to sell stocks which have very high visibility. But then there will be stocks which have lesser earning growth visibility, but still trading at very high valuations. So there people could take. So I think it has to be stock by stock and in the small and mid cap side as well as on the large cap side. So what also happens is because of certain sectors and stocks becoming fancied, uh, given that the economy is still growing at around 7%, we still can get opportunities to buy with stocks which are getting ignored. So I think a lot of movements tend to be cyclical also, but broadly, overall, as a whole, looking at the valuation of the mid cap and small cap indices overall, for people who are fully invested, I think they should generate some cash.
Sandeep, the risk now is that everybody is pricing in a full majority. Everybody is pricing, or markets perhaps are now pricing in what could be called as a wow number on fourth. So a little bit of disappointment, little bit of volatility till the time the final tally is not out, let's say between 8 to 10 or between 9 to 11 or 9 to 1, that may just lead you to a big swing on fourth.
So I am not in the camp who believes that a 300 majority or a 400 majority has any difference. In my view, there is no difference in that. So for people who want to believe that they could play for or protect themselves against volatility, in my view, in a parliamentary democracy, it doesn't matter whether with what majority you come, as long as you come with a majority which cannot be broken.
Sandeep, there seems to be a subtle comeback in FMCG. It is backed by some encouraging commentary which came post results. And now, in general, there seems to be a view that inflationary pressure are behind us. Most of the companies, even the smaller ones, I was looking at BKG numbers in the morning, I was looking at other small FMCG companies also, margins are stabilizing.
Yeah, so margins are stabilized, input cost pressures are not there. Companies are trying to push volumes by not increasing prices. So some amount of margin improvement is getting pushed back because companies are spending on advertisement and promotion in the near term. But I think as the volume recovery plays out, then we could see those margins also expand. So I think people have to take a slightly longer term view and longer term doesn't mean few years. I think longer term means as the monsoon comes, as the festival season comes, definitely there has to be recovery in volume because in consumer goods, if the economy is growing at 7% and for 3 years consecutively, the volume growth is just 2-3%, it's not sustainable. So ultimately, this consumption has to come back.
Okay, fair enough. Meantime, let's also get in a view as to where you stand, Sandeep, when it comes to the entire IT basket. It is a bit divided as to whether or not this is going to be, the second half of the year is going to be the time for IT to really shine again, or would it be a very cautious approach, very selective when it comes to IT?
So IT sector as a whole has got beaten down, and it's today a sector which people don't want to buy. So I think that thing has changed over the last 6 months, where still 6 months back, people were wanting to buy IT on every day. Now people don't are not talking about that. So that could, I think, potentially be creating a situation where the bottoming out could be happening in the near term. Return prospects are would be moderate because near-term growth visibility is not there, and most of the companies are still saying discretionary spending is not yet back. But I think from here, the large cap names delivering 10-12% return is a possibility.
Sandeep, okay, the 3 year visibility for defense, great. But the 3 month visibility after the recent rally, is it slightly dim? I mean, there are There are all kind of market participants, those who have a 3-day time frame, those who have a 3-month time frame, those who have a 3-year time frame. I'm keeping the 3-year aside. Let's talk about the ones who've got a 3-day or a 30-day time frame. How is the risk reward ratio stacked up in these government dominated stocks, given that we've now seen a very smart pre-election rally? Defense, railways, power, this entire basket, so to speak.
Yes, the risk reward is poor because of the fact that they have gone up so much. The valuation of most of these stocks are much higher than many of the private sector stocks, also well regarded high quality management private sector stocks. No one is looking at valuations. So everyone is just buying based on the fact that because these stocks have moved up so much, they continue to move up the same way. And that's the biggest risk, obviously, in the market because no one is bothered about valuations. People want, like, I remember in the year 2000, there was only IT stocks trading at 100 plus PE, and that was thought to be a crazy time. Now we have any sort of random stock trading at 80, 100 PE. So I think whenever the reversal comes, many of these stocks can fall 75-80% also ultimately. I'm not predicting that happening in the near term, but then these valuations are clearly not sustainable.
Sandeep, can I throw in one more stock in the melting pot, Bajaj Finance? If you are also of the view that a sharpish rally in large cap stocks is coming out of these four, Reliance, HDFC Bank, Infosys and Bajaj Finance, which is the strongest one for next 6 months?
So
Why
I think
thinking before answering?
fundament.
Why are you thinking before answering? Normally you're very sharp. सवाल से पहले आंसर आ जाता है.
Because none of these companies actually, except Reliance, are strong per se, like in terms of performance at this point of. Right. So the only stock which is strong is Reliance.
So then which is the large cap stock according to you? Since you specifically mentioned that a 8-10% move in large cap is coming, which are the one you're bullish on then, Sandeep?
So on the large cap side, I would be bullish on L&T. I would be still positive on something like a Maruti or in terms of absolute percentage return potential.
If you like this video, then like, share and subscribe to ET Now.